just be aware that just because the year tends to end on the positive note doesn't mean you can't have a decent correction in that process. Now, here's what you need to know before the bell this morning. The market is up right now a little over 15% for the year to date, right? So it's been a very, very healthy start to the beginning of this year. Market continues to ride this wave higher. Now on Friday had a little bit of a kind of a sloppy day on Friday. Not surprising. It was the end of the quarter, a lot of rebalancing. So again, bonds were under pressure on Friday, rebalancing through that. We saw a lot of pressure on different areas of the stock market last week, rebalancing as well. So again, we're through that. We're now starting today is the first day of the second half of the rest of your life. I mean, the rest of the year. So this is, so again, this is important. Now, typically when markets are up 15% or 10%, whatever, in the first half of the year, it tends to lead to a second half of the year that is also positive. So it doesn't mean that the market just keeps going higher indefinitely. This was the same story that we saw last year. At this point last year, we had this exact same market. Then we had that 10% correction in July, August, September. So again, just be aware that just because the year tends to end on the positive note doesn't mean you can't have a decent correction in that process. And I would still expect one. July tends to be a fairly decent month for the markets. So again, kind of continue this market, kind of continues to trend higher through July. August, September, October tends to be weaker in election years. Again, we talked about this before, markets kind of de-risk ahead of the election itself, just because I don't know who's going to win. What does that mean for taxes? What does that mean for tariffs? All those type of things. So markets tend to de-risk. And then once we find out who the new president is and what those policies are likely to be, markets tend to rally into the end of the year. So look for a correction sometime this summer as an opportunity to add exposure if you need it. But again, overall, first half of the year has been very good. We're continuing to kind of just ride here. But again, importantly, we talked about this, a couple of weeks ago. We said, hey, look, markets are getting overbought. And that's pretty much going to mean the markets are kind of limited to the upside. And that's very much been the case over the last, really kind of 3 weeks. The market hasn't gone anywhere. It's been a lot of up and down, back and forth. It seems like we're making progress. Really not. But we just kind of been consolidating here. Now, that's good, right? That we're consolidating and not, having a much bigger correction here. So that kind of gives this market the ability to work off some of this overbought condition. We're still not done with that process yet. So again, look for a bit more limitation to the upside. Got to work off this overbought condition. We're working through that process. We are on a sell signal temporarily. That's going to also limit upside. So again, just kind of trade accordingly. Look for a lot of rotation within the markets itself. But again, we're just still kind of working through that kind of a process right now. And look, it's been a great year. Again, we're up over 15% total return basis, up almost at 15% on a price-only basis this year. So again, markets are doing fine, nothing to worry about here. But again, likely limited here near term until we work off some of those conditions. But that'll give you a better opportunity to add exposure if you need that. Okay, so that's what you need to know before the bell this morning.